It gives me great pleasure to bring on board Mr. Suresh Narayanan, Chairman and Managing Director of Nestle India, to walk us through the quarter gone by, how things in a sense are emerging for Nestle after this recent report that Nestle has been using a lot of sugar in infant food, how and where coffee prices are headed, and finally, when will India see the advent of Nespresso stores? Let's discuss all that and much more with the man himself. You can see on the screen the man who heads and runs one of the most successful companies of India, that is Nestle India. Good to have you on show. Thank you for joining us. I want to first start with what you've reported for the quarter gone by. In a tough environment, sales or domestic sales are up 9%, exports are up 20%, and margins have expanded by nearly 300 bips. What should we start with? Top line, exports, or margin expansion?
Look, Nikunj, thank you for your time, and thank you for having me on your show. I think a couple of things which I'm very gratified about. One is I'm very grateful to the team, partners, consumers, just everyone involved in the Nestle operation, including farmers, for the fact that despite a choppy environment on consumption, we have still recorded a 9% growth on domestic sales and 9.3% overall. I think of interest to you, Nikunj, is that this has an underlying growth of about 4 to 5% on volumes, which is definitely on the upward trajectory. And even a category like prepared dishes, Maggi, has had a volume evolution even stronger than the 4 to 5% at 6% plus. So you can see that the evolution has been fairly strong. The evolution in exports also, both third-party exports and exports to affiliates, have been double-digit and strong. The operating margins, as you can see, are up by 270 basis points. The net profits are up by 250 basis points. And what is very heartening is, Nikunj, the cash generation of the business is at over 41 billion. That's about 17% of sales. So the core fundamentals of the organization continue to be fairly strong, despite the fact that the environment around is not really as sanguine as one would like it to be.
But given that cocoa prices have gone up, sugar prices have been volatile, milk prices, if you're in for a hot summer, could go higher, would you be able to maintain these margins, or would you be forced to take a price hike?
Look, Nikunj, one of the things that I always urge on Nestle, looking at Nestle India, is that you need to look at us in terms of a band of growth and a band of profitability. So operating margin somewhere in the 20 to 22% kind of range is a range you need to look at because of exactly the kind of volatility that we have. And since we are a long-term oriented company, and we have also been on the path of penetration-led volume growth, I cannot in every quarter ensure that there is a uptick in terms of operating margins or net profits or whatever are the profit measures. But if you look at me in a band saying 10 to 12% growth and a 20 to 22% kind of operating margin, I think that will be a more mature and a more realistic way of looking at the Nestle business. Because remember that as I speak to you, I mean, there are new businesses that are coming into the fold, and we'll talk about it. All of these need investments. And that means that I would like to generate some of the additional margins that I make and plow it into these businesses in order to spur their growth, which means that I would like to utilize the core inherent strength of the business to fuel some of the new categories that we are getting into as well.
Where is the volume growth headed then? One, could you give us a mix, or could you give us a sense of new versus old? Where is the volume growth headed then?
Look, volume growth will still, for the foreseeable future, come from the core categories, because the new categories, like for example, health science or pet care or Nespresso for that matter, all will be on relatively lower volume basis. So therefore, the volume evolution there in order to make a significant impact on the overall company evolution will take some time. But the four core categories, which is milks and nutrition, fairly strong and robust growth there. Prepared dishes, I think we had a little bit of a setback when we took the prices up. We are now coming back once again, and there, as I told you, the growth levels are better than the average. Chocolates confectionery, even though the quarter is reporting relatively muted growth, but that's off a base of almost 25% growth in the comparable quarter. This again will be a strong category for propelling the volume growth of the company. And coffee and beverages is where I think we've had one of our strongest performance. There has been incremental 30 million households which have been added in the last couple of years. There has been incremental market share and also a fairly strong evolution of the portfolio. And there with both the premiumization and with Nespresso coming in, I think there is an even stronger possibility of growth.
Let me draw your attention to the latest controversy, which in a sense has impacted the Nestle stock, and the general curiosity levels are high after a recent report that Nestle has been using sugar content which is much higher than the sugar content what they've used in the baby food formulation in Europe. Is that true? And if yes, how would you like to respond to that report?
Look, Nikunj, I would like to state in all transparency, and you know me, for many years, I always like to face the reality and put down the facts as they are, rather than paint a picture that is not. Firstly, give me a little bit of time to dwell on the fact that what is important for an infant below the age of 18 months is the level of nutrition that is provided. What is the level of nutrition? This is globally set. This has got nothing to do with any particular geography. In terms of protein, fats, vitamins, minerals, and carbohydrates. Now, typically, in the standards that are set, the protein level would be in the region of about 10 to 15% of the total energy component that is important for the child. Fats would be anywhere between 20 and 30% of the energy component. Carbohydrates would be between 50 and 70%. Now, the protein levels in the case of Cerelac, if you take on average, is about 15% or about 15% of total energy. If you look at fats, it's about 9.4%, which gives about 20% of total energy. Vitamins, minerals, there is no calorific content. It's more 10 vitamins and 4 minerals that go to make the product. On carbohydrates, infants need between 50 and 70%, and Nestle Cerelac provides about 68% of the energy coming from carbohydrates. Carbohydrates come from sugars and total sugars. And in total sugars, there are two components to it. One is natural sugars that come because of the raw material ingredient, like lactose from milk, like glucose from cereals, and there is, which is the majority of, and also from fruit juices and fruit purees that we add, there is a natural element of sugar there. And this is the majority of the sugars that comes into the carbohydrate content of the product. Now, on added sugar, as per the FSSAI guidelines, and I think they are wise enough to set the guidelines for the country based on Codex standards and other standards, they have said that you can go up to 20% of added sugar, that is sucrose, provided it gives 20% of the carbohydrate requirement in the product. So add sucrose, provided it goes up to 20% of the carbohydrate requirement. As far as we are concerned, the level of added sugar in our product, which comes from basic sugar and also from cereal-based crispies, which are added in order to texturize the feed, is at 7.1 grams per 100 grams of product, when the FSSAI standard is 13.6 grams for 100 grams of feed. So our standards are at almost 50% of what the FSSAI specifies. Second fact, in Europe, there are products with added sugar and no added sugar. So this statement being made that there is a kind of a racial divide between what happens in Europe and what happens in the rest of the world. There are products in Europe which are added sugar, no added sugar. There are products in Asia, added sugar, no added sugar. So therefore, this unfortunate remark that has been made is something that is factually not correct, because in Europe, you will find products with added sugar and with no added sugar as well. Now, on added sugar, the company has in the last 5 years made a progress of reducing by almost 30% the added sugar. The journey continues, Nikunj. I'm not stopping there. I'm looking at further ways of reducing the amount of added sugar that I've got. And I think this is the perspective in which we need to look at this whole thing. It is not that one element is overriding and is irresponsible. That nutrition profile of the feed is important for the child, for the infant. That is met through different sources of carbohydrate, protein, and fat, as per the global standards, Codex, and as per the local standards, FSSAI. And this is exactly what we have done in order to produce the product. So these are the facts that I would like to put on the table. That is what the truth of the matter.
Thank you for outlining that, sir. My follow-up question is that, so what was your last communication from the Food Authority? Have you received any kind of a communication or notice, or just been a routine factory visit from them?
No, I think I must say that because of the nature of the relationship between the FSSAI and us, which is very respectful and very professional, they had indicated to us, there's no formal communication that has been received, but they had indicated to us that they would like to pick up samples from our respective factories. There are 2 factories that make baby food, and we have opened the doors. We've said, look, whenever you want to take the samples, please come and take. Whatever testing you do, we stand by the testing, and we are very confident. There is, Nikunj, I have nothing to hide. It was exactly the same situation some years ago. I have nothing to hide. You can come and see the process. You can come and see what I'm doing and what steps that we are taking. The proof of the product lies in the trust and quality and safety that has enshrined this company for over 150 years. And I stand by it. So as a leader, I'm here in front of you to talk about it and not send out a communique or not trying to skirt the issue.
I want to get this absolutely right for our viewers. Your baby food is as per the food standards which have been set by FSSAI, and you are maintaining that quality. I guess the larger question is that the standards, in a sense, when they were set, that was a couple of decades ago, and they need to be revisited, especially given that the sugar content has gone higher, and the awareness that sugar is okay, gives you energy, but it has long-term negative health benefits. It needs to be revisited. Is that something which needs to be thought through?
Look, I think Nikunj, it is very clear. We ourselves as a company are doing it, reducing the added sugar. I said 30% in the last 5 years, and the journey is going forward. My vision would be one day to have a zero added sugar product in the market. Let me be very clear about it. It's not something that I would like to walk away from an ambition that we have as a company. I think the food safety, the FSSAI is extremely competent, looking at global standards. They incidentally revise it not decades, but they revise it every couple of years. Discussions will definitely happen, and we are proactive, and we are a professional part of that discussion to see whatever evolves. So if there is a revised standard that evolves, we are fully supportive of it, and we will endeavor to ensure that whatever we give is completely in line with the guidelines that are prevalent locally as per the FSSAI.
But have your sales got impacted ever since this report came out?
What I'm sharing with you is exactly material that has also been shared with the healthcare professionals. We have not seen any significant impact. And in any case, the samples that will be drawn by the FSSAI will be for all manufacturers. So it's not just exclusively Nestle, it is all manufacturers. And so we are in it together as different players with our own perspectives on nutrition, quality and safety.
You've been very transparent, sir. Thank you very much. But my next follow-up question is about this whole awareness which is coming about the usage of sugar. And it is just not restricted to baby food. It is moving to colas, it is moving to chocolates, it is moving to other categories. Is there serious thinking within food makers like Nestle that they need to actively reduce sugar content of irrespective of the origin of the food? Sugar needs to come down, alternates need to take in now. Is that something you're seriously working towards?
I think it's a very serious consideration, Nikunj. The only thing I would like to leave is, as a company, we believe in nothing called good nutrition and bad nutrition. We believe in balanced nutrition. Even a portion of chocolate eaten in moderation doesn't do you harm. Drinking 5 liters of water at one shot may not do you all that much of good either. So if you moderate ourselves in terms of what we eat and moderate over a period of time the amount of sugar that these products contain, I think we can be well on the road to better health and prosperity.
Nestle has announced new entries, a JV in this case with a pharma company. You're entering into nutraceuticals. Espresso, which a coffee lover would say India mein kab aayegi, looks like aane wali hai. Why are you diversifying into categories which Nestle has not been actively present in India? Espresso, I can understand it's there global, it's coming to India. But why, let's say, joint venture with JV with Dr. Reddy to move into nutraceuticals?
Because I think it's a very good question, Nikunj. It's fair to say that the whole healthcare space is becoming a very relevant and a very resonant space amongst consumers in our country. Nestle itself had a health science business, but it was what I would call a subscale business. For a company of our size, a 40, 50, 60 crore business is hardly of any scale to be called out as something that we can put in more investment to make it grow. So there were two options. Either we continue at the pace at which we are continuing, or else we team up with, if we are able to find, a like-minded, respectable and a full-scale player in the pharma sector who would be able to give us the benefit of the channel, the pharmacy knowledge and the benefit of a portfolio to expand the presence of health science, Nestle Health Science, over a period of time. In that search, Dr. Reddy's, which is a highly respected company, I have the highest regard for the management and for the credibility of that organization. We made a definitive partnership agreement with them to bring in some of our brands and to bring in some of the Dr. Reddy brands to look at areas of adult wellness, to look at women and child health, and to look at the vitamin, mineral and health supplements area in order to make a viable full-scale business for both of us. And I think that is where the 51-49 between Dr. Reddy's and Nestle has come with a call option 6 years from now. We see this, one of the things, Nikunj, we know that we have got the products. We have got Nature's Bounty and we've got Resource High Protein and we've got Peptamen and we've got other products in our portfolio. But we don't have the kind of channel expertise and the channel capabilities and the width and depth that a well-known, full-scale, compatible pharma player can have. And that's where Dr. Reddy's fitted into it. They see some integration there in terms of the consumer centricity of the brands that the joint venture can market. We see it as a route to market and as a capability that we are able to bring to the table. And I really believe that this marriage will consummate into some very good efforts in a very large segment. I mean, the vitamin mineral health supplement segment is more than 20,000 crores in this country. So it's a very large segment to talk about.
So as you look into future, how much of your future capex starting FY25 will actually move towards new business ventures, and how much would be marked for capacity expansion or new extension of the existing brands?
Look, I think for the foreseeable future, for the next 2 to 3 years, the expansion would be really on the core categories that we are. We are significantly expanding our coffee facilities, our chocolate and confectionery facilities, some of the facilities in milks and nutrition, and putting up our 10th factory in Odisha. So there's almost 2,500 crore plus investments coming on in the next 3 years, which will be in the core portfolio of the company. There are 3 engines of growth that we see, significant engines of growth: the pet care business, the health science business, and the Nespresso business. And these will also get their fair share of investment as we go along. But next couple of years, it will still be on the core. And Nespresso, I think the first boutique we are looking at end of this year, hopefully in Delhi. And I'm quite excited by the prospect. As you rightly said, Nespresso has been clinically around in the homes of people for a long time, without Nestle's active participation in it. Now you'll see the Nestle participation in it.
Built into new categories, as you built into new products categories, can I say that you would be investing a lot more and the real benefits would come after 2 or 3 years, and that's the time next leg of margin expansion would come in? Because right now you will be investing in new category building, they will be built up. 3-4 years is when they will be part of the family and they will start contributing.
I think directionally you're right, Nikunj. What we need to do is to use the resources that we have today in the core categories and plow them into the development of the new categories. All the categories, as you have rightly alluded to, are margin accretive. Health science, Nespresso, pet care are all margin accretive businesses, and hopefully after a period of time they'll be able to take care of themselves, and hopefully the rising tide will raise the boat of margins for the company.
So if I wrap the interaction by saying that what we've seen for the quarter gone by is impressive. Revenue growth 10%, margin expansion impressive, even though there was an inflationary pressure from cocoa, sugar, volatility in milk prices. Next 2 to 3 years, you are confident, you are excited, and you feel as India will migrate to for $4 trillion to $5 trillion economy and then 5 to 7. The product categories you are in, they're actually going to see a hockey stick curve, demand curve.
Yeah, look, I really see this. Firstly, the level of commitment is very high, Nikunj. You talked about the parent. I think there's a huge commitment here of the parent and of the board of directors of this company. There is a lot of courage for us. People talk about getting into new categories. We are looking at this. That's why now is the time to get into new categories. And I think we are looking at a lot of consolidation happening in terms of penetration and in terms of growth in the hinterlands, in the smaller towns, which one is seeing happening. It wasn't true 5-10 years ago. Today we are seeing it happening. And infrastructure development is playing a huge role in this. And I therefore think that these are going to be years which are going to be rich in terms of the harvest of opportunity that we can have. But of course, we have to work doubly hard because not everything is ironed out, and the road is not very, very smooth in every quarter and in every category.
Well, really appreciate your time, and thank you for being transparent, open, and patiently asking all the questions. And thank you once again on behalf of Team ET Now.
If you like this video, then like, share and subscribe to ET Now.